everyone, Alexionescu here. Welcome to Investor's Guide to the Galaxy. Whatever the UAW strike outcome, Elon Musk has already won. Turkey's President Erdogan and Elon Musk discussed establishing a Tesla car factory in Turkey. Although before we start, if you find this video helpful, it would mean a lot to me if you crashed that like button and subscribe to my channel. It's totally free and takes just a split second. If you want to show more appreciation, consider subscribing to my Patreon. Now, let's dive right into it. Tesla stock price. Past month, up 27%. Past 6 months, up 50%. Past year, down 11%. Past 5 years, up 1,276%. UAW. In my opinion, the demands from UAW are way off. You don't shoot your own foot. You don't kill the chicken that feeds you. To my point, here is an article that says Elon Musk has already won, which was obvious before the strike even began. Elon had the old automakers by the balls before this. More than a day into the United Auto Workers strike against the Detroit automakers, and one thing is clear, Elon Musk has already won, and the billionaire tycoon isn't even involved. Musk won before the strike began earlier Friday. He won before negotiations started 2 months ago. From the get-go, General Motors, Ford Motor, and Chrysler parent Stellantis were expected to spend more on wages because of the union's pressure. The question is just how much of an increase, and so far their offers haven't pleased the union, igniting this past week's work stoppage. Whatever happens, more money surely will be spent. Any wage increase further advances Tesla's already tremendous cost advantage in EVs over its old US peers, which are contending with generations of legacy expenses while trying to steer a costly transition to electric from gas-powered vehicles. Wow, well said. In March, Musk revealed plans to build on his advantage by setting a goal of slashing manufacturing costs from the automaker's next-generation vehicle by 50%, an ambitious agenda that will depend upon advanced automation, savvy engineering, and other changes. The Tesla chief's executive's actions this year have shown how Tesla can take advantage of a lower cost structure to engage in price wars with rivals around the world to juice sales. In July, Tesla reported second quarter profit that rose 20% even after reducing prices. Around the same time, in the midst of steep losses from its electric vehicles, Ford said it would slow its EV production growth. Ouch. All of this is playing out as the UAW seeks more than what the Detroit automakers say they can afford and remain competitive. The companies have offered wage increases of varying sizes reaching as high as 20% over the 4 years, while UAW President Shawn Fain countered with a mid-30% increase down from a previously asked of at least 40%. 40% is way high. The Detroit company's labor costs, including wages and benefits, are estimated an average of $66 an hour, according to industry data. That compares with $45 at Tesla, which isn't unionized and was founded 20 years ago. Meeting all of Fain's initial demands would boost average hourly labor costs to $136 for the Detroit companies, Wells Fargo estimated. A key difference between Tesla employees' compensation and that of the UAW workers resolves around company upside. UAW workers have been getting profit-sharing bonuses while Tesla workers receive stock options, which don't have a direct cash cost to the company. Over the years, Tesla shares have risen like a rocket, though there have been periods of turbulence. More than the years that shares have risen. Yeah. Shares this year have more than doubled. Fain argues that past contracts haven't kept up with inflation, hurting the union's roughly 146,000 auto workers' spending power, and that members' sacrifices have helped make the companies profitable in recent years. This is our generation's defining moment, Fain said late Thursday before the walkout. The money is there. The cause is righteous. Shortly afterward, Ford responded saying the union's demand would more than double Ford's current UAW-related labor costs, which are already significantly higher than the labor cost of Tesla, Toyota, and other foreign-owned automakers in the United States that utilize non-union represented labor. Many analysts so far are expecting that the Detroit companies will ultimately absorb the added costs. The much larger issue is that it adds incremental pressure to their already challenging transition to an EV world. Dan Levy, an analyst for Barclays, cautioned investors in a recent note. Let's take a look what Jim Farley, Ford CEO, has to say about this.
Quickly put in some perspective, the offer that they have, what they're demanding relative to where you are right now, how much damage would that do to the bottom line if you were to say, sure, we'll give you 40%?
If we signed up for the UAW's request, instead of making money and distributing $75,000 in profit sharing in the last 10 years, we would have lost $15 billion and gone bankrupt by now. The average pay would be nearly $300,000 fully fringed for a 4-day work week. There is no way.
Per employee, per UAW
employee. Yeah, this is our fully tenured school teacher in the U.S. makes $66,000. Someone from the military or fireman makes mid-50,000. This is 4 or 5 times, 6 times what they make. There's no way we can be sustainable as a company. That's why we put our proposal in 2 weeks ago to say, look, you want us to choose bankruptcy over supporting our workers? Here's our proposal. Let's work through this. We've heard nothing.
It's not looking good for them. Chamat Paliapatia on Twitter. The unions have decided to cut their nose off to spite their face. This labor deal, if it happens, will destroy the legacy OEM automakers. Their only path out would be to automate and replace unionized people with robots or de-unionize. Neither are possible. So if this plan gets implemented, expect the automakers to bleed money. This is the tipping point towards structural long-term insolvency, and I don't see how the capital markets will allow these OEMs to raise long-term capital without paying exorbitant rates. Correct. On top of this, the demand risk for these OEMs is that hyper-automated non-unionized competitors like Tesla can now completely run away with the car market because they will be able to aggressively lower prices while Ford, Stellantis, and so on will be forced to raise prices to pay for this labor deal. Yeah, it's true. This will happen. An interesting news about Tesla. Turkish President Erdogan called on Elon Musk, the head of electric car maker Tesla, to establish a factory in Turkey during a meeting in New York, Erdogan's office said Monday. Erdogan, who is in the US to attend the UN General Assembly, also discussed potential cooperation between Musk's space exploration firm SpaceX and Turkey's space program, the Turkish President Office said. The statement said Erdogan told Musk that Turkey would welcome cooperation on artificial intelligence and Starlink SpaceX satellite internet service. Musk said SpaceX wanted to secure the necessary license to offer Starlink in Turkey. Images of the meeting showed Musk holding one of his sons as he talked to Erdogan. Turkish Industry and Technology Minister Mehmet Fatih Kachir said Musk described Turkey as among the most important candidates for Tesla investment. He added that Musk and Erdogan also discussed Turkey's armed aerial drone program. I'd like to know your opinion on all of this. Please leave a comment below. If you like this video, please smash the like button so that other people like you see this video. And don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.